Hello, fellow investors. Hope you're all doing well. Today, I'm going to be talking about an extremely important part of Tesla's earnings and operations that has gotten absolutely no attention. I'm referring to the sale of non-zero emission vehicle credits, or to put it simply, non-ZEV credits. Now, what is a zero emission vehicle credit, you might ask? To put it simply, 11 states have imposed environmental policies that require all automotive companies to obtain a certain amount of these ZEV credits each year. Failure to obtain these credits results in a hefty fine of $5,000 per credit deficit. Companies can earn these credits by selling an electric vehicle. As of right now, 3% of an automotive company's annual sales equates to the number of ZEV credits they must obtain. Considering the only company that is able to produce zero-emission vehicles profitably is Tesla, all the other automotive manufacturers have a few options. They can either manufacture electric vehicles that sell them at a huge loss, pay the fine, or they can purchase these credits from another automotive company, which are called non-ZEV credits. Both ZEV and non-ZEV credits have the same value. It's more of an identifier of whether or not the company bought or earned those credits. Now, Tesla, on the other hand, has an abundance of extra credits left over each year due to the vast amount of EVs they produce. The company's been taking advantage of these regulations for the past decade and has sold around $2 billion worth of these credits since 2010. Now, of course, that's nice and all, but how could that possibly affect Tesla's earnings in 2020 and beyond? $2 billion over a 10-year period is not that much for a company of Tesla's size. If we look back to the company's 2019 report, though, we see they brought in around $600 million worth of revenue off of just selling these credits to automotive companies. That's over 25% of their total ZEV credit sales since inception. Still, that's a lot of money, but it's not enough to significantly change the company's earnings. In late 2019, though, there were a few articles posted which stated that Fiat and GM had disclosed a $1.6 billion ZEV credit deal with Tesla, and the sale would occur in 2020. Big shocker, we're in 2020, and first quarter results are right around the corner. I believe we should see around $500 million or more of this revenue come in for the company in Q1 alone, which could put the company at a position to do something they've never done before: be profitable in their weakest cyclical quarter. Right now, Tesla's reported quite a strong production and delivery number, which is set to put them just shy of profitability. With the addition of $500 million of pure revenue, the company has a chance to beat expectations significantly and shock the entire automotive industry. In the future, we could see more states adopting these ZEV policies, as well as existing states increasing the percentage of EVs that car companies must sell in order to not pay a fine. I believe this year the company will continue to beat expectations in terms of productions and deliveries in China, as well as the demand for the Model Y. On top of this, extra revenue from non-ZEV credits, self-driving features, and upgrades to their factories amidst the shutdown all lead me to believe the company is in far better position than even the bulls think. To top it all off, as if that wasn't enough, Tesla has a ton of cash if the coronavirus lasts longer than we expect, while other automotive companies have taken a huge hit financially from all of this and could even face bankruptcy. That's going to wrap up my thoughts on Tesla going into 2020 and the huge potential the company has to capitalize on. If you guys enjoyed, please be sure to smash that like button for the YouTube algorithm and subscribe if you enjoyed. Thank you as always, and have a wonderful day.